It's about that time of day again. My name is Joseph. It's already Thursday evening, December the 7th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Crude is bullish and 3 legs higher tonight, telling me to wait for seller failures after a relatively deep pullback tomorrow morning. Speaking of tomorrow morning, S&P is bullish ahead of tomorrow's highly anticipated non-farm payroll report. And a potential spike in range pattern is telling me to stay patient for a 2-legged pullback tomorrow, looking for buying opportunities after that news is released. The Nasdaq is also bullish, but trading into major resistance tonight. That's right, we're back to that range we talked about in last night's newsletter. So my plan for tomorrow, I'm looking for bear traps below the moving average unless we see some proof of a reversal off the high. Stick around for more on the Nasdaq here in just a moment. Gold is bearish with a parabolic move lower. Apparently, the success of Bitcoin is not too good for the yellow metal right now. Bottom line, parabolic move lower. Difficult to want to sell down here right now on gold. So my plan is to wait for a pullback. I'm looking for buyer failures up above that moving average tomorrow morning. And then, of course, tomorrow morning, the euro is also bearish, but we're trading at major support. What a beautiful selling opportunity up in that battle zone on the euro today. We're back down to major support, though, so I'm waiting to sell the bounce up in the battle zone, right, or follow the move lower on strength on Friday morning. I got a great newsletter in store for you guys and gals tonight. We got a great strategy setting up for tomorrow's non-farm Friday. And of course, before I jump in though, I do want to remind you, if you're on our YouTube channel right now, make sure you subscribe to my YouTube channel and make sure you get notified every time I post a new video. That way you never miss a psychology lesson or newsletter lesson. Or if you really want to be in tune with what's going on here at School of Trade, don't forget to go here to Sideways Markets and join the mailing list. If you're on our YouTube channel right now, there's a bunch of links in the description of that YouTube video. Follow that link here to the blog at Sideways Markets, join the mailing list, and you'll get all the good stuff we send out Monday through Friday. Also, while you're here, don't forget, join me on social media. I'm always posting important charts, links, and updates throughout the week. Speaking of charts, you can download all of the charts from tonight's video, have them ready on your computer, right where it says click here to download today's charts. And don't forget to grab that free pass, upper right-hand corner. What are you waiting for? If you're not a member here at School of Trade, you're going to learn more with me on that free pass than you will anywhere else on the interwebs. I can pretty much guarantee you that. Grab that free pass in the upper right-hand corner and come out and join me as a guest in the trade room. And if you have any questions about membership, free trial, free pass, newsletter, psychology stuff, whatever the questions may be, no question too big or too small, right? Hit me up on live support on the right-hand side of the website. What an incredible first full week of December it has been, and we're going to wrap things up for the week tomorrow morning in our trade room. We open up 8 o'clock Eastern time every Monday through Friday morning. Now, speaking of Friday morning, we got a lot to talk about here tonight, so let's jump right in. First of all, tomorrow is a Friday, right? So don't forget, anytime we have a Friday session, I'm always looking for early in, early out, right? 11 o'clock Eastern time is kind of that line in the sand. You really want to be watching the personality of the market that you're trading, because typically after 10:30, 10:45 on a Friday morning, we start seeing the personality shift, and you're no longer seeing the big market makers, the big whales, right, in the markets out there after 10:30, 10:45. So once it starts slowing down, that's going to tell us to pack things up, review all of our trades. We'll go into ongoing trading in our trade room, and we'll head out for the weekend. I'm also watching on Friday mornings those prior week open, high, low, close levels, right? At the end of the week, we start watching last week's open, high, low, close levels. And of course, same thing for the end of the month, right? End of the month, we start watching last month's levels as well. Also, one more thing for tomorrow. That's right. We're gonna pile it all on here right now. One more thing for tomorrow. Tomorrow is it's not the first Friday of the month, but the first Friday of the month was the first day of the month last week. So they've pushed back the non-farm payroll number to tomorrow morning at 8:30 a.m. Eastern time. Now, I've been talking about this all week, so this is probably not the first time you've heard this if you've been watching me all week in the newsletter. But the bottom line is the first Friday of every 1 month, unless the first day of the month's a Friday, which it was, right, last Friday, right, we have non-farm payrolls. This is right up there with the FOMC announcement. This is right up there with big major economic news. Now, what you want to be aware of this is for tomorrow. Everything ahead of that number tomorrow, right, 8:30 a.m. Eastern time. Now, see, this is always tough, right, because I can't really predict everything. But usually ahead of that non-farm payroll number, again, 8:30 tomorrow morning, usually it's relatively quiet, low volume, low personality. It doesn't really feel like anybody's really got a purpose to the market. So if you're coming out tomorrow, if you're trading the overnight session, Asia, London, into the US, if you're trading in Asia or London, just be aware, right? If you're seeing the market feel kind of lifeless and kind of sluggish, it's because people are waiting for that non-farm number tomorrow morning at 8:30 a.m. Now, I got to admit, over the last few months, right? We get this report every 1 month. Over the last few months, I've been pleasantly surprised how good the price action has been before the news comes out. It isn't usually that good, but hopefully tomorrow, hopefully overnight will be better than we expect, right? So just keep an eye on that. Again, where the personality is what you're looking for in the overnight session. And remember, it takes some experience with the individual market to be able to pick up on the personality. How do you learn the personality of a human being? You spend time with them, then right, when they're happy, when they're sad, right? You get the point, right? So you've got to have experience with this specific market that you're trading in order for you to understand or to see that the personality is sluggish. So keep an eye on that tomorrow morning. And then I also want to caution you around the news tomorrow. This is a big news event. And anytime we have one of these big news events, like I said before, there are a few of these news events that really shake things up. You get the weekly inventory report every Wednesday on crude oil, right, which was actually pretty mild yesterday. But the point is, though, most of the time it's a no trade, right, news event. Then you've got the FOMC announcement, right, another big market moving event. And then you got the non-farm payroll number every first Friday of every 1 month. So tomorrow's a big news event. Typically what happens is the market will either move too fast or too slow after that news number comes out tomorrow. Now remember, we had the Wednesday ADP employment report come out, right? And that Wednesday's number is being used to forecast Friday's employment number. We talked about this earlier the week, right? So the employment number on Wednesday, now everybody knows what they're expecting on Friday. Okay, so what does that mean for you? Well, it means that most of these markets have likely already priced in what is expected for tomorrow morning's news at 8:30 a.m. Now, that's important because if the news comes out tomorrow morning as expected, the price will usually kind of sit there for a little while, 5, 10, 15 minutes, and then it will start to move. But if the number tomorrow comes out outside of expectations, much higher than expected, like we saw last month, right? Or maybe much lower than expected, or maybe last month's big surprise shocker higher, right? Maybe it's revised down, right? So again, either higher or lower than the expectation, what's going to happen is traders are going to have to execute plan B or plan C, right? They've already got their plan A, they've already got their positions on what they're expecting tomorrow, but if it comes out with outside of expectations, we usually see a relatively violent market. So the bottom line is, whatever happens, whether it comes within or outside of expectation, either the market will usually be really slow or it'll be really fast. And so what I recommend to all my clients is give it at least 5-10 minutes after that news comes out tomorrow morning, see what it's doing, and then we can kind of adapt what we're seeing from there. Oftentimes we see a real sluggish reaction for the first few minutes, and then we start seeing the big moves off of it, right? So you kind of got to wait patiently once that news comes out. I would not recommend trading the news report. I would recommend giving it a few minutes afterwards to really see what the reaction looks like, right, from that market. That's pretty much all we have on the schedule for tomorrow, right? So early in, early out, prior week open, high, low, close levels. Give it 5 or 10 minutes after the news. Oh, and again, be careful of trading before the news because this is a big news event that not a lot of big market makers, not a lot of big whales, right, in these markets, these big lot traders, they can't run the risk of having a lot of positions open ahead of what is expected to be a very volatile, right, market moving event. Now, don't forget, I've covered a lot here tonight. We're going to go over it again tomorrow. I look forward to seeing you tomorrow morning, 8 o'clock Eastern time in the trade room. Now, before that happens, though, let's get ready for tomorrow. Let's do our homework tonight so we're prepared for tomorrow. We're going to go crude oil, S&P, Nasdaq, gold, and then we'll wrap up tonight on the euro. The euro has had such a great week this week. It's incredible. Hope you guys be able to find some profitable trading opportunities off this newsletter. Let's start first here with crude oil, and then we'll work our way down as we always do. Crude is bullish and trading at 3 legs higher tonight, telling me that we are likely due for a pullback. You know me, I never like to impose my beliefs on the markets, but typically when we see a market go 3 legs higher, beautiful 3 legs higher, typically that means we're ready for a pullback. And, you know, I have to admit, with the trend being so bearish over the past few days, yeah, looking left, it's been a little bit bearish the past few days. With the trend being so bearish the past few days, this could really be a pretty significant pullback, right? So really right now, I'm planning on being patient ahead of news tomorrow morning and watching that situation develop, but I'm watching closely to see how the pullback looks. If it's a real sharp pullback, then I've got to wait for the bears to fail. But if it's a nice controlled pullback, though, we'll have the confidence to buy nice and confidently back up to retest the high. Most important thing that I can see on this chart right now, I think there are 3, maybe 4 big things here. First of all, again, as I mentioned, very, very strong, right, bear trend over the past few days. So in all reality, this could be just a setup here for the bears to take this down, right? The second thing that I'm seeing here right now is the fact that we have beautiful, beautiful bull channel, right? Beautiful rotation, low to high, high to low, low to high, high to low, low to high. Now, what do we always talk about whenever we see a great looking channel? Wait for that dip, buy at support, and the target is back up to retest the high, right? So that's a big, big factor in my plan going into tomorrow. Another factor is the fact that we are 1, 2, 3 legs higher. Now, there's a lot of psychology behind this, right? The first leg higher, these are usually the market makers, right? These are the guys and gals who are in the know. They are the early adopters. They're the ones that were thought to be a little bit crazy, right, when they first did it, but now they're starting to look like geniuses. Then you have all the institutions, right? The institutions, they come in, they say, okay, now we have a change in trend. Now we're going to put client capital behind it. We're going to put our capital behind it. And then we have, right, kind of that third leg, right? This is the general public, right? This is the general public. This is the mom and pop, right? This is the water cooler talk. This is, 2 o'clock in the morning, late night television commercials, right? This is everybody, traders and non-traders saying, did you see crude? Did you see crude? In fact, now that I talk about this, it's almost like what we're dealing with your favorite currency, Bitcoin, right? I mean, how many people have come up to me in the last 24 hours and said, are you doing Bitcoin? Have you seen Bitcoin? Right? Same type of personality to it, right? Or same type of psychology to it. Market makers, then institutions, then the general public, right? And what happens is, as this mania, as the psychology goes, all of a sudden the general public comes in, they start mortgaging their houses to buy this stuff, right? We all know how that story goes. So the bottom line is, this blow off, right? This third leg higher, normally this is where market makers start taking profit, institutions start issuing guidance, right? And of course the public, well, they're the public. They don't know any better. I don't want to go into too much detail about this, but the bottom line is we're 3 legs up. And psychologically speaking, there's always potential for a 4th leg, and if you've watched my newsletter before, you know that anytime we have a market that goes 4 legs higher, we know it's really, really difficult to keep buying that market. So we can definitely keep going higher tomorrow, that's for sure. We get some resistance up there at 57, so that makes an easy target. But right now, I'm definitely looking for, because of the psychology of 3 legs higher, I'm looking for a relatively deep pullback. Now that deep pullback, again, as I mentioned, could be a little bit sharp, right? Because we have that long-term bearish trend, right? So look at that nice deep pullback. The kind of the final thing here is I would expect that deep pullback to also line up here now as a possible larger measured move, right? So I'm kind of anticipating that run up to that 57 area, right? 57.05 is that last swing high. 57.23 is that measured move. So relatively simple there, right? Relatively simple there, but we got to get a pullback, obviously, for that one. And don't forget, like I said earlier, right? I won't be surprised if it goes 4 legs higher because they're probably hunting for that 57.05 area, right? So watch and see if we do go higher, right? Kind of watch and see if we can get that 4 legs up, right? If we do get that 4th leg higher, remember that usually, oops, sorry about that, wrong button. That usually creates some pretty rock solid resistance up here as well. Okay, so now we know the components of the strategy. Let's put it together. What if price goes up? What if price goes down? What if price goes sideways? The easy one right now, what if price goes down? If price goes down here, a little bit of trend line coming in, maybe we get a 2-legged pullback right down in that battle zone tomorrow. Maybe it's a little bit easier than that, right? Maybe it's a little bit of a sharp move down. Bears try to sell that pullback. They fail, right? Failure into pullback, and then back up to retest the high. Remember, if we pull back off these highs, where's the objective, right? Yeah, target is back up to retest the high. We talk about this all the time. Those 3 questions we talked about in Monday night's newsletter, I'm always asking who has control, where's their objective, where's their target, and where are we, right? So make sure we're looking for that buy off the failure, buy off that pullback, but resist the temptation to buy up around those highs. What if price goes sideways? Oh, it could easily go sideways here, especially with news coming out right early tomorrow morning. Although crude oil probably not going to be as affected by that news than the market like a gold or a euro, right, or a Nasdaq or an S&P. So one of the reasons why I really enjoy trading crude oil is because it's really only affected mostly by that weekly inventory report, right? If you're not here to gamble on news events, right, that's a really good thing. So if we do go sideways here, bulls have the bias, right? If we do go sideways, I'm looking for traps, I'm looking for failures, I'm looking for that 2-try rule, right, to buy back up as well, right? So watch out for that sideways movement. Look to buy that low tomorrow. What if it goes higher here? Again, if it goes higher here, we get the 4th leg higher, right? Which I don't want to say is the kind of the kiss of death, right, for the buyers, but we've seen so many times in my trade room, and if you're a client of mine, you probably recall many times in this, where we'll see a market that is scorching, right, or collapsing lower, right? Goes 4 legs up, 4 legs down, and all of a sudden the market just says, okay, we're done, and it just kind of sits there, right, and won't kind of get through that 4th leg higher. So bottom line is we do have this level of resistance overhead. If we don't pull back, there won't be a measured move to worry about there, but this will be 4 legs, right, 4 legs higher. If that's the case, we still have a support level here, right? So we still can look for that buy off of that low, or, right, watch that prior swing, right, up, and maybe we get that deep trap, right? Again, like I said, it's a relatively bear market. We may see a really sharp, right, pullback there. So the moral of the story is if we keep going higher, we're still in that, and again, I don't like to use the term overbought, but we're still kind of in that overbought territory, and I'm waiting for a pullback from there. Also, again, don't forget, if it goes higher here, right, it may go sideways higher here too, right? And so same thing, right? Wait to buy that pullback from there. How do we turn bearish? Could easily turn bearish tomorrow, right? Could easily do it. We get big news tomorrow morning. How do we turn bearish? 3 things we always look for, right? Strength, pullback, strength. I want to see those sellers strong move down. I want to see them touch that moving average, and I want to see them continue through that low, right? Through that low. Once we start seeing those bears, right, jump all over this thing lower, then we know we'll grab that new bear channel. We'll find those levels of resistance. We'll look to sell those levels, and the target will be back down to retest that 55.82. Got a great plan here for the oil market tomorrow morning. I plan on seeing you tomorrow morning, 8 o'clock Eastern time. Now, over to some markets that are definitely susceptible to this big news tomorrow morning. And don't forget, we're watching rollover right now. As I'm watching here, what time is it? 6:45 Eastern time. As I'm watching volume here on the S&P, we are still seeing more volume on the 1217 than the 318 contract. It's getting pretty close. There was about 1.5 million contracts, right, on the 1217. There was about 300,000 contracts on the 318. The Nasdaq looks really close right now. It looks like the Nasdaq might be ready to roll over. Remember, what you're doing is you're looking at the volume, right? This is not contract expiration. we're looking at volume right now, right? So on the NQ, we get the 1217 contract, 708 contracts traded, 318, 742. So as of right now, the Nasdaq would be rolling over. I would wait until about 7 a.m., 8 a.m. tomorrow morning to make the decision. But just remember, we are watching rollover. So, I'm going to go with the 1217 contract right now. We did not roll over today. But be aware, right? Prices will be a little bit different on the 318 contract. I can't even believe I'm saying the word 18 right now, letters 18, or the numbers 18, if I can speak my English correctly. But the bottom line is we'll wait and see what that looks like, right, tomorrow morning as far as volume goes. All right, so again, possible rollover tomorrow on the S&P. We'll check that tomorrow morning, right when we open up our trade room. S&P is bullish with 3 legs higher in what appears to be either a strong bull channel or a spike in range. So I'm really waiting right now to see the buyer's reaction to today's high. If we see profit taking at these highs, then we know it's a spike in range. And my plan is to look for traps and seller failures down in the battle zone. If we see buyers continue, which it looks like they're trying to do right now, then I'm going to try and get above this little resistance trend line coming in overhead and finish the rotation back to the high, or possibly wait patiently for rotation back down to low of this big bull channel. Don't forget the big variables for tomorrow, rollover, right, and that non-farm payroll number tomorrow morning at 8:30 a.m., which could send the market to a frenzy, or it could have the market going sideways here. A couple components here right now on the S&P. Boy, great example of a flag pattern, right, that failed last night. I told you guys, don't get sucked into being a seller down there, right? Remember that from last night's newsletter? That was a classic case. In fact, once we saw it jump up at 9:30 this morning, this was on right to the upside. It was pretty easy to see it coming a mile away. Bottom line, though, is I'm going to draw that trend line off of that low from yesterday, right, up to today's low. That creates some major support. That's one big component in today's session. And then, of course, do you see the 3 legs? Do you see them, right? 1 leg, 2 leg, 3 leg. What happens after 3 legs up? A nice deep pullback to buy, going back up to retest the high. Good example of what I was just talking about, right, on the oil chart, right? Oil's three legs up. S&P is a little bit ahead, right, of what we're expecting from oil tomorrow, right? That's one more component. Second component here, draw that channel up. You can see lots of wicks there. Shave off that wick, right? Add it up. Beautiful example. Wick to wick at the high, body to body at the low. Usually when you draw a channel, one side will be wicks, one side will be bodies. We talk about all those details inside of your intermediate classes here at School of Trade. This channel, what does that channel tell us here, kids? It tells us that we're going to go up, down, up, right? Back to the high, and then from there, back down to that low. So really your job here in the overnight session, okay, comes another part of this component, right? Draw that trend line across. If you want to be a buyer on that, right, get above it and finish off that move up to, right, the high. And then maybe we can use that trend line, both trend lines, as support, right, to buy the low of that channel. I'm getting ahead of myself right now. I lost count. What is this, the fourth component? Strong move up, pull back. When we pull back off the highs, where's the objective? Back to retest the high. Where are we right now, guys? We're back to retest the high. Do I want to buy here? No. Why? Because I don't want to buy when buyers who are already in are likely getting out. Okay, I'm not worried about sellers right now because it's a bull market. I'm worried we're going to pull back because buyers aren't going to be interested in buying at this high. The final kind of component here is this spike in range, potential spike in range. How do I know if it's a spike in range or not? We're going to find out real fast. Does it go through that high, right? Does it look like buyers are buying as much as they can get their hands on? It's not a spike in range then. But if we see what usually happens, and then there's a deep pullback off that high, then we know it's a spike in range. I'm going to buy the low of that trading range. So as you can see, a lot of it has to do with what happens in the short term right up around these highs, right? If we do go higher here, as I always mention, right, up, down, sideways. Let's go up first. We have a level of resistance. I can use that level of resistance on the way up to the top of that channel, and then I can use the underbelly of that trend line along with the underbelly of that channel, right? I can use it as support as well. There are 2 buying opportunities. Don't forget, though, as we go into the high of that channel, right, get a measured move waiting up there. Don't want to be a buyer for those highs. Want to buy that dip coming back down, okay? That's if price goes higher. What if price goes lower here? If it goes lower, I hope it goes lower. I really do. It'll be a lot easier for us, right? Now, of course, pending contract rollover, pending the non-farm payrolls. I know there's a lot of variables here for tomorrow. But if it goes lower here, failure, trap pattern, right? Back up from there. We get a couple key levels of support there. Prior swings, rising trend lines, lows of that trend, right? Lows of that range, lows of that channel. That makes for a great spot there to be a buyer as the market goes lower. If it goes sideways here, obviously that will require the market to back off that high, right? Buy the low, sell the high, buy the low, sell the high. We talked about this earlier. If it goes right, if it goes sideways, we're going to buy that low right there. But how do we go higher here, right? What happens there? I want to get that moving average up, and then I can buy that pullback to the moving average, right? Don't forget, I call this pattern the fake out, breakout, pullback pattern. How's that for an acronym? The old FOBO PB, right? Try to have some fun with you guys here. If you go to my YouTube channel or my blog at Sideways Markets and search for the term fake out, breakout, pullback pattern, right? You'll learn a whole lot more about that specific pattern. So make sure you check that out. That'll be your homework for tomorrow. All right, boys and girls. So we have a good plan for whether price goes up, whether it goes down, goes sideways. How do we turn bearish? Strength, pullback, strength. I would really want to get this moving average below. Get that, right? Get those bears showing us they want to hold that pullback below it. If we can, where are they going? Yeah, 2620. Right back to that low again, which can easily happen again because we got rollover and we got news tomorrow. But again, the bears have to take back control. They lost control right before the opening bell this morning. It was a bull day all day on the S&P, at least for the U.S. session traders, that is. And of course, we have no reason, right, to second guess at this point until it changes direction. Should be interesting to see what happens though. In the next few hours, we should know more about what the plan going forward will be on the Emini. Over to another Emini that looks somewhat similar, but is very much different this evening. The Nasdaq, right, is also bullish, also going to be heavily affected by rollover tomorrow as well. So keep an eye on the volume here overnight. The bulls right now are trying to complete their third leg higher, but the top of this trading range is likely keeping the buyers from getting too aggressive. You know, I really don't want to buy the highs here, so my plan is to look for a pullback into the battle zone or buy a two-legged pullback after a strong break higher tomorrow. Well, we talked about this in last night's newsletter, right? We were looking for a rotation back up to the high of that range, and you can see the sellers definitely gave it a good shot to try and reverse it, right? But the momentum right now going higher is just too strong. If you recall from last night's newsletter, we talked about these kind of multi-directional trending environments, these wide ranges where you've really got to see something like this, right? You've got to see that quick, right? That quick jump and then hold, and then you know it's a trend, right? You know it's changed, right? Quick jump and then hold, and you know it's changed, right? So you gotta be anticipating that change, but then you have to see the proof of it as well. We got the strong move down, but they didn't hold that pullback, right? Like they did here or here. So we're not there yet. We're not bearish, right? The problem is we're bullish. We're just at a major level of resistance, right? That's one big concern here. Another thing to keep an eye on is this spike and channel. Boy, what a well-behaved spike and channel this has been, right? Literally buying the low of this channel, right, over the past day and a half has yielded some very successful results, right? Everyone pulls back to that channel, buyers come back in and they're buying it up, right, and going back up to retest the high. Now that channel, right, a spike in channel always tells me I can buy the low of that channel, but what do we always know about a spike in channel? Spike in channels always tell us don't get too comfortable, wait for that deep pullback, right? Wait for that deep pullback to buy below those prior swings, right? If you recall last night, the battle zone was down here. We never got that deep pullback, right? I'm moving the battle zone up, and we'll try to get that pullback, right, this time around. Now, we might get it because, as you can see, we've got 1, two, right? And there's that 3 legs up right there. Now, this should be interesting because by the time we get to that third leg higher, we will possibly be running stops of those sellers who got in off these highs, right? You have to assume there are probably a bunch of stop losses hanging out up there, right? Probably a bunch of stop losses hanging out there. So we might just see enough kind of blow through to get that moving average up. And we might see this market continue. Again, we get that big news tomorrow morning, right, at 8:30 a.m. Eastern time. So now that you know all the components here, price goes up, price goes down, price goes sideways. Right now, hopefully we get the price going lower here, right? Deep pullback, buyers don't lose control, right? Seller failure at the moving average and back up we go from there. This is not drawn to scale, by the way, right? Looking for a seller failure, looking for a trap low down below that 6,300 so I can avoid buying into that high. What if price goes sideways? If it goes sideways, we have to assume this is going to be our trading range. And whenever we have a trading range, we're always looking for those buying opportunities using the 2-try rule, using failures and traps down below that trading range, right? What if price goes higher here? This is where things are going to get interesting. A lot of it's going to have to do with how the market kind of feels when it goes higher. You know, for example, right, tomorrow's non-farm Friday. So is it just a straight line up? Right? I mean, if this market torches higher here, then obviously we're not going to worry about the high of that range, and we'll look at this as possibly another spike in channel, right? You'd be amazed how many times we see a spike in channel go into another spike in channel. We just saw it on gold, which we'll grab here in a moment as well, right? And we'll have to buy those dips, right, if we see that spike in channel tomorrow morning, right? But if it just kind of lazily goes higher here, remember, I'm always watching that moving average, right? And the moving average really needs to get above that high back here before I can really start to be confident in this, right, in this move going higher. So again, if it goes higher, right, if it just blitzes higher, then there's no question about it, right? We're going to use those levels of resistance as support tomorrow, and we'll keep an eye out for a spike in channel, right, if we do get that blitz higher. But if it kind of moseys its way higher here, let's keep focused on buying this low. Right? Keep focused on buying that low here. So it all depends on kind of how this market looks when it goes higher, just because we have the top of this trading range, and I can't be too aggressive at the top of that trading range. How do we turn bearish? Well, I mentioned earlier, right? We saw a couple of examples there. Strong move down, moving average comes over, bears test it, bears hold, and we're off to the races, right? If we do get that bear reversal, find that level of resistance, 2-legged pullback, right? And we're selling where back down, right, to retest that low. All right, guys? So it can definitely be a reversal tomorrow. Again, make sure you keep an eye on the volume for the E-minis because they are going through contract rollover most likely at some point tomorrow. How about some gold? The yellow metal getting beat up here today. Very bearish, but this parabolic move, a parabolic move is a move that gets steeper and steeper as it goes. You can see the moving average getting sharper and sharper and steeper and steeper, right? This parabolic move below the spike in channel, this overshoot, is a little too aggressive for me to want to sell right now. So my plan is to look for buyer failures up above the moving average, or, right, use the top of that spike in channel to sell up at that channel high or up in the battle zone as resistance tomorrow. Now, I'm also watching for a possible trading range tomorrow because, you know, we often see big moves like these start to go sideways the following day because sellers just don't want to sell this low. And if nobody takes their profit, right, the price won't go any higher, so it may go sideways. And if it does go sideways, we know the plan, right, for a bearish market into a trading range. Really a couple key components right now. We have just a monstrous untested reversal line back at 63.2. If the buyers were able to take control tomorrow, that is where we are likely going to be going. We'll probably negate most of this move if for some reason tomorrow's non-farm payroll number gives a little bit of fear in the market, right? And those buyers take control. Remember, one of the most affected markets by the non-farm payroll number is going to be gold, right? It heavily affects the US dollar, which intrinsically, right, affects gold. And then, of course, the next one, right, will be the euro, which we'll grab right from there. So with that said, that's a big component here for tomorrow if the bulls can take control. I'm also seeing almost like a trading range here, right? Anytime we see overlapping candlesticks, you know that a lot of volume changed hands there. It's pretty much a trading range, and that becomes a magnet, right, for those bears to wait for that sell back down. And then, of course, you got the typical strong move down here. That strong move down, if I can draw this correctly here, that strong move down into a spike in channel. Now, remember, normally with a spike in channel, normally we're going to see that trap high and back down from there, right? That becomes a measured move from there. But as you can see, it didn't happen, right? Clearly gold here got a little bit fussy as it just blasted through that low. Now, this is an overshoot, right? And you might be thinking, well, Joe, isn't this overshoot right now? Isn't that just a little bit, right, too much to sell? Won't it overshoot back at these highs? Well, let's put it this way. If we see this overshoot back to the opposite side, this will not be a bear market anymore, right? This will not be a bear market. It'll be a bull market. If we go all the way up to that overshoot around 1260, this will, of course, have made a very strong run. There'll be too much support in the way. It'll likely be a bull market at that time. So I'm not going to worry too much about the overshoot. What's more important right now is the fact that this thing just sunk so hard. Now, anytime we see a strong move, what do we expect? Two-legged pullback and a retest of that low. What I like to do is get above that moving average, rope in some of those buyers, and then right back down, right, to retest that low. And then we can see, right, what do we get from there? Do we go through the low, right, or do we bounce and this has become a trading range, okay? So what if price goes up? What if price goes down? What if price goes sideways? Up. I'm looking for that buyer failure above that moving average, target back down to that low. Maybe we get a little bit lucky. Maybe we get a nice deep pullback here, a little two-legged, whoop, right, trap high up inside that battle zone, right? Remember, if we do end up going up and running, right, this will turn into a bull market, right? So price goes up, failure, and back down from there. And really, all it has to do is get just above that moving average. Just above that moving average. It's such a strong move down, you'll likely see a lot of sellers coming in at that moving average. What if price goes sideways? Easily could, right? We kind of fall back down. We don't go lower, but we don't go higher, right? This becomes a bear market into a trading range. Very, very common. Not sure if we're going to get that tomorrow because it's a non-farm payroll number, right? Because it'll usually shake things up pretty good tomorrow morning, right? But again, 1, 2, right, and then back down, and then back down we go from there. Remember, the objective is still to get back down to that low. What if we go lower here? This is kind of the hard part, right? What if we go lower? If we go lower, this is a spike, right? That's a spike. Okay, whether we like it or not. If we go lower, look for that spike in channel going lower. Remember, we see it all the time, where a spike in channel will turn another spike in channel into another spike in channel, right? As this market goes lower. So if we do see that, find those two lows. Bring it to the high, and that tells you want to sell, right, up around those highs, right? So up, sell short, resistance, right? Trap high, sell from there. Okay, so if price goes lower, resist the temptation to chase the market going lower. Be aware, though, this is a spike down, so if it keeps going lower, right, look for that spike and channel, sell the high, trap high, right, and back down we go from there. What is also interesting here on the gold is the fact that we talk about the three legs here, right? You've got that one leg, that two leg, right, and that three leg down. That is very interesting right now, isn't it? So 3 legs down, right? Market makers, institutions, general public. We'll see what tomorrow looks like here on gold. Again, be careful on gold tomorrow. Tomorrow is non-farm Friday, which it's always a big question mark, because again, that non-farm number is so volatile with the dollar, right? And gold, of course, being right, kind of that knee-jerk, negative correlation of the dollar here tomorrow morning. How about some euro? Wrapping up time the euro. Euro's bearish and trading down the low of yesterday's trading range, which is considered the seller's objective, right? We talked about this in last night's newsletter. The bears have control, but I'm not quite interested in selling at this support level. So my plan for tomorrow is to look for selling opportunities up around the battle zone overhead or wait for a successful breakout pullback to new lows tomorrow. We talked about this a lot in detail last night. We had this bear channel right? We knew we had that bear channel. We knew we wanted to find a trap high, right? And the bears get their trap high late in today's session. You really had to stay patient for that one today, right, to make some profit on the euro. Now, we knew that when the sellers came in to sell high, right, we knew when the sellers came in to sell high, we knew where their objective was. Where was their objective? Yeah, back down to retest that low, right? So we knew that when sellers came in and sold high, the objective would be back down to retest the low. Where are we right now? We're at the low of that range. I look at this now, much like we talked about the S&P. Where's that S&P chart? Right? Remember how we talked about how the S&P could be a strong move up, pull back, and if it pulls back off that, it'd be a trading range. This is a bull bias in a trading range. Okay, here's same thing, but a bear bias, right? Strong move down, pulls up, retest that low. Do we go through the low, right? Acceptance, or do we go bounce back up and then look to sell it again back off that high, right? Easily could be a strong move down into a trading range. Okay, so that's a very, very important part of the plan here for tomorrow. What if price goes up? What if price goes down? What if price goes sideways? Well, if we go higher, first of all, right, going higher here, we're going to basically look for the same thing as a 4. Let's shift this 4 a little bit here, right? If we go higher, up, buyer failure, back down, right? Up, trap, buyer failure, back down. Maybe it's a two-legged pullback, right? Back into that, right? Back into that high, and then back down, right? Two-legged pullback, into a failure, into a pullback pattern, right? Plenty of options if you go higher here. Failure, right? Little pullback pattern from there. Just don't sell right into that low. Right? What if we go sideways here? We might, right? Pretty strong move down. You know, we might see this market consolidate here in the short term. If we go higher here, it'll be a 1, 2, and then back down. Just be careful with that sell off. You know, just be careful with that sell, because remember, if it really jumps, right? If it really jumps, right, then you got to be aware we're trying to go back to the top of that range and let that sell back down. So really keep an eye on how that market breaks higher there. And then what if price goes lower? What if price goes lower here? This is a trading range, which to assume. So I want to get that moving average below. Nice strong move down, right? And then whoop, right back up we go from there, right? And you're off to the races from there, going lower. We'll find that new bear channel, right? New channel rotation, new measured move, and there isn't a lot to work with down here. It's a pretty wide open space tomorrow, so we're going to see kind of what that market develops in. New channel, new measured move, right? Same basic strategy, really the same strategy we talked about in last night's newsletter for the euro 24 hours ago. All right, guys, 3 legs. What a great example today across most of these markets, right? Across most of these markets, you'll notice this one again, right? 1, 2, 3, and then jump back up, right? So again, we don't have to reverse or correct at 3 legs, right? But the psychology of the market, right, always tells us to be looking for that when the time comes. Now, guys, don't forget, we've covered a lot of information on this nightly newsletter, and boy, do I appreciate your valuable time every evening, Monday through Thursday. If you want to learn more about everything we do here at School of Trade, if you're on the YouTube channel right now, check out the links in the description of that YouTube video. Follow one of those links over to our website at schooloftrade.com, right? Join the free trial. I'll shoot you an invite to attend our trade room as a guest. You can learn more about what it means to be a client, learn all the different types of strategies we use here at School of Trade. And while you're here, don't forget, we have a place for everyone. Whether you're a brand new trader and you're perfect for our beginner course, right? Or you're an experienced veteran, but you still haven't been able to achieve that consistent result you're looking for. Or maybe like a lot of smart traders, you always want to learn new strategies, right, to keep putting more tools in your toolbox. Our advanced course is perfect for you there. You can learn more about that on the website. And then don't forget, I'm always here to help. If you have any questions along the way, hit me up on live support if I can help with anything along the way. Guys and gals, don't forget, tomorrow morning, 8 o'clock Eastern Time, we open up our trade room for all of our advanced members. 8:30 we have, right, that major news comes out tomorrow. Watch that contract rollover, watch the volume, and don't forget, I do not send out a newsletter on Friday afternoon. So I'll see you guys. If I don't see you tomorrow morning, I'll see you same time, same place next Monday. And by the way, if you've been wondering where my psychology videos are, those will be back to normal schedule next week as well. All right, guys, be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.